Good morning, everybody. Good morning. Happy Monday morning. Happy 6:30 a.m. Central Standard Time Monday, February 16th. Just getting my chart or getting my goodies set up off screen over here. There we go. There we go. There we go. We are rolling. We are rolling, boys and girls. Just get my top setups off screen. There's that. And there is that. All right. Go surprise index. All right. Well, good morning. I am glad to be back to regular hours for me. I had a 4-day class Wednesday through Saturday, and it involved me getting up at 2 o'clock in the morning, my time, because the class was being conducted in London. So it was a currency class with a company that I just got a fresh instant funded account with. I had to go through a 2-part interview to get it. And if I saw correctly on the posting I got it from, it was like over 400 people had clicked apply. So I don't know if 400 people applied for it or that's just how many just clicked it of interest, right? But nevertheless, 400 people clicked it. And I was one of the small handful that they selected. So I was pretty excited about that. I don't know if that makes me special. I don't know if it makes me lucky. I don't know if they just liked my humor. I don't know, or maybe my 12 years of experience, but I got it. So it was a pretty exciting thing. And part of that, not gifting, but part of accepting or getting that account was a 4-day class to go through. So most of it was pretty much a review for me. Already, I've been around the game for 12 years, so I already have seen a thing or two. But there was a couple things that I really, really got out of it that I find valuable that's going to actually help me along with my supply and demand strategy I've already got. And it's really as simple as finding, kind of filtering out trades that maybe don't meet certain requirements with how they trade, because they trade based off of overbought, oversold, along with a few moving averages, just showing and verifying trends on a couple different time frames. And so, and it just meshes seamlessly because I've already been kind of back testing it, but I feel like it meshes seamlessly with what I already do with, trend and curve analysis and supply and demand, all this on the technical level, by the way. So it wasn't anything to do with fundamental or sentiment analysis. It was strictly about a technical readings. So, I've always been kind of hesitant about all the material out there. But with this outfit, they've been out now for about 14 years. So, the longevity is what was important to me. And that was why I was okay with listening to them and going through the classes. But not only that, the most valuable part of it was day 4, which was Saturday, which was the mindset day. Marvin, hey, how's it going? Yeah, I'm not in any trades. So let me see, NASDAQ. I'll have to look at that in a second. But yeah, just to finish up what I was saying real quick, and then we'll get on to the charts. The day 4, which was Saturday, was all about mindset and the psychology behind trading. So, and I've been through some of the stuff, but we dug in a lot deeper into why we do what we do, why we break our rules that we say we're going to follow, and why we deviate and things of that nature. So as silly and as cheesy as it might sound, especially to brand new traders, psychology in trading is everything. Everything. It's something that we have to have. It's something that we have to have in check if we're going to ever make it in this game of trading. Okay, psychology, and it's just like that with about anything, really. But it's not something I don't think that's really delved into as deeply as trading, because trading is all about emotions and controlling them to break, to follow your rules and not break them. That's a big, humongous part about it, guys. There's thousands of different trading strategies out there, And you can really make money with just about every single one of them. Think about it. It wouldn't be a strategy. It wouldn't be a strategy unless somebody was able to make it work and make money off of it. Right? So if you think about it from that point of view, then is that really the most important thing? Probably not. The most important thing is right here between our two ears. It's the psychology of it. So there's a lot of good books on the subject. But again, the mindset part of this 4-day class was all about understanding us and all of our little, everything, all the pieces. We got asked like 50 questions and we had to rate ourselves 1 to 10. Hey, is this something that happens to you rarely or once in a while or all the time? And it just has to do with, a lot of different things. Think of all the possible parameters of trading from a psychological standpoint. Okay. And then you go through a couple little exercises and it just kind of helped reset the mind, reset the brain. So anyway, I don't want to get too deep into that, but perhaps that's something I could make a video on at some point. But no, all in all, it was a very good experience, but I'm glad to be back to the regular times, guys. I was getting tired of going to bed at 8 p.m. my time because that's just not something I'm used to doing. Going to bed at 8 o'clock so I can wake up at 2 a.m. for a 3 a.m. class. So I'm glad to be back. But anyway, Marvin, you're asking about NASDAQ shorts. Yeah, I did very little trading the second half of last week, but I don't remember I don't remember a NASDAQ trade. Let me go double check my trade history over here on my other screen real quick. Closed positions. NASDAQ. Oh, okay. Was that from a week ago? The last time I was in a trade over here was a NASDAQ trade where I lost a whole $5. So a break-even trade. What about over here on this account? NASDAQ. Yeah, I'm still in the NASDAQ. I'm sorry. Yeah, I'm still in a NASDAQ trade. I might even still have it on this screen over here, actually. Yeah, here we go. Yeah, that's right, because I had this 4-hour short. In fact, I want to turn on. So yeah, it's still chugging along, my guy. I'm just trying to remember if this was a trade I got into. Yeah, I still paid attention to the charts during my class, but I didn't really do much trading. So I didn't follow the charts as closely as I normally would. I was so focused on the class itself and sleeping. I didn't even have enough energy to do any of my shorts videos in the evenings like I normally do or anything. So yeah, NASDAQ. Let's see here. Still kind of keeping an eye on. This looks to me like a little bit of a demand zone that we're kind of bouncing into. Now, NASDAQ itself, as far as top setups goes, has kind of went back to neutral territory. I do know that. So I'm not really getting that same sell signal that I was getting, obviously, when I got in the trade. Where is NASDAQ? It's right in front of me. NASDAQ. NASDAQ. Where's she at, NASDAQ? Are you on the list now? Oh, come on. Is NASDAQ hiding from me here? It's right in front of my face and I don't see it. Oh, yeah, there it is, -4. Okay, so it's still close. But anyway, yeah, when I'm in a trade, guys, even if it goes to neutral territory, I don't just automatically close it out, because I wouldn't have got into it unless the trend was obviously in my favor, right? So, you kind of rely on the trend at that point, that if it does, go against you, then at least the trend continues it and pushes it back in your direction. So yeah, we're still in it. Now, we did touch this, as I'm seeing this now, we did touch this 4-hour demand zone, this indecision candle over here. Okay. So that's partially why we got a little bit of a rejection, but I would expect this thing to roll over. Think about it. It bounced into the zone, but rather than just taking off and going against me, it's kind of went up a little and just kind of consolidated, went sideways. So I feel like it should probably just turn around and roll over. Okay. I mean, that's what I'm betting my money on because you see where I've got my take profit. Okay, or profit target. It's not quite. I mean, I may just close it out there. I'll probably end up just leaving that open, and as soon as the price gets down there, just close it out because at that point it'll turn into a double bottom. And keep in mind that I've got a neutral score on it now. It's not giving me a -5 or lower. And I don't even like trading -5s and -6s that much, or +5s or +6s, right? I like the higher numbers. Give me 7s, 8s, and 9s on the positive or negative side or higher, right? I just want to get as many of these odds enhancers in my favor. Talking about the top setups and inflation, jobs, economic numbers. Okay. But anyway, as we stand right now, I did a full video yesterday. Get this over here. Did a video, kind of a Sunday watch list video, and I don't know why this is going so slow. Come on. Come on, laptop. Wake up. What the world is going on? Shit. Give me 1 second, guys. I swear. Why is it not working? Huh. Well, I guess YouTube just doesn't want to open up on another screen for me. Good grief. 1 second, guys. Let me just make sure everything's working. Where are you at? Oh, there you go. Okay. Anyway, we'll see if YouTube decides to cooperate or not here in a minute. But as it stands right now, as you can see with the scores on the Edge Finder, guys, as always, if you ever want access to this, if you don't have it, you can always just go to a1trading.com, find it over here. Okay. And this is it right here, Edge Finder. So a1trading.com, Edge Finder, you can get access. They work with you on payment plans if you're in a country where maybe money is a lot, or the US dollar is a lot pricier. They'll work out money, they'll work out payment plans with you. But also, I do think that they've got a 40% off, a 40% discount going this week. Okay, they had a free week last week. I kind of mentioned on one of my shorts early in the week before all my class chaos started. So everybody was able to get a free copy last week to use during the week. And then obviously, it's just good for just the week. But this week, I do believe they're doing a 40% off. So it's a really good opportunity to get something that to me is just as good, if not better, than the Bloomberg terminal. And you'll pay a fraction of the cost. In fact, what you pay on this thing is less than 1 month of service of Bloomberg terminal, right? So that's how crazy it is. And I think it's just as good. So anyway, but yeah, as far as the top setups, everything's went towards neutral. So it's not really that exciting right now. I got to be 100% honest with you. I'm going to probably be spending some more time over here on the stocks, on the stock box, checking out some of these top stocks. I mean, I'm getting better scoring over here than I am really in the currency world at the moment. Okay, taking a look at things like Visa, MasterCard, Amazon, some of these strong. And remember, supply and demand works just as good. It works just as good in the stock world. Okay, if not better, to be honest with you, because with stocks you tend to get a lot of better trends. Remember, in currencies, in Forex trading, you get a lot of sideways stuff if you just kind of scroll out to the higher time frames. But if you trade stocks, these things kind of trend a lot better. Okay? The trends just go longer, much longer than currencies. So I don't want to say it's easier, but I feel like, full disclosure, I feel like supply and demand might work even better in stocks. Whether because your uptrends, your downtrends, they just tend to, they tend to run a lot better. So anyway, yeah, I'll be paying attention to some of these, these bullish scores over here. Some of these probably not as much on the bearish side. I mean, Tesla, GM, okay, these are getting some really strong bearish signals right now when we're looking at the financial readings. So I'll probably pay attention to these top couple, maybe these top 4 over here, CVX as well, Mark, on the shorts. So this will just basically give me more things to trade, right? Since over here, remember, we're not getting very many strong signals. Okay, I don't trade dollar South African rand, so that's off my list. Really, the strongest thing we have right now is the pound CAD. Right? And remember, I like 7s and 8s and 9s and higher. So that leaves me with very few choices right now. Now, I'll still obviously pay attention to these, but they just won't excite me as much as a 7 or 8 and a 9 or a 10 or higher, right? So, so yeah, that's why for me personally, I'm going to add in a lot more of these stock items because I've got stocks in my Ola Prime account. I've got a 100K Ola Prime challenge account that I got, and lo and behold, it comes with the top 25, large cap stocks. So it's kind of nice to be able to trade some stocks as well. That's the whole reason I went out and got the stock box. Okay, that's another item you can get over here from A1 Trading. Just go over here and click on stock box. And there's videos, most importantly, guys, on the stock box and the edge finder. If you scroll all the way down, well, let's see here. There's video tutorials on everything. Okay, right here, edge finder tutorials, stock box tutorials. Okay, and you just click on that and you scroll down, and there should be some videos. Yeah, down here. There you go. So this just basically shows you how to operate it. Shows you what what his thinking was when he created all the little, aspects of it. So definitely go check that out if you have not. Again, I don't get paid a dime for, promoting this. I just do it because it single-handedly, guys, is what turned my trading around, just by following the hard data. Fundamental analysis, sentiment analysis, and technical analysis, the sexy stuff is the least important. Okay. So keep that in mind. I know it's probably a hot take, but just go ask a banker. But anyway, we'll take a look at these pound CAD. Let's go look at this on a chart. I'm sorry, guys. Before I do, I got to look at the economic calendar. Now, today, there's nothing. I'll just say that right up front. There's not a whole lot of anything going on today. Okay. Right here, Monday. No red folder events, nothing with high impact degrees. So it's probably just I'll be keeping an eye on the geopolitics of the world because, as always, that's probably one of the biggest drivers of currencies and any other asset out there that we trade as it is. Okay. The geopolitics, what's going on over in Iran and in the Gulf. Okay. Russia, Ukraine, Greenland, right? Tariffs. Okay, with Canada and other places, the European Union, and maybe some of the lip flapping sessions as far as speeches. That's probably going to be what I'm going to be paying attention to the most. I think if I go back to calendar, let me turn on the orange and yellow folder events for the day. Okay, so we're looking here. Yeah, I thought somebody was speaking. So German Buba president, Nigel, will be flapping their lips here in about 4 or 5 hours, it looks like. So again, more of a light impact yellow folder event, but it's always good to at least understand some of these speeches, guys, because even though these show yellow folder or some of them show orange folders, sometimes they could say things that just spike the hell out of a market. So you don't have to watch every little, every piece, but one thing you can do is just go click on their source here on Forex Factory and go find their speech. Okay. I'm just doing this at random, but there's one from the 12th from Joachim Nagel, and then you can usually find, yeah, here you go. Okay, there's the whole speech. So what you can do is copy and paste this over into Grok or ChatGPT or DeepSeek, whatever AI service you like to use, and just tell it, hey, summarize this into a half-page summary. Let me know if this is bullish or bearish for the market. Let me know if this is dovish or hawkish for the currency, the underlying currency, et cetera, et cetera. And that's a brilliant way of utilizing Grok to kind of help simplify this stuff for you so that you don't have to watch paint dry, watch grass grow. You don't have to, slobber all over yourself trying to get through a speech. Okay. Because once we know the color of the tie, a couple keywords, it's about all we need to know, right? Anyway, But yeah, just to finish up over here on the economic calendar, I'm going to get rid of the stuff that doesn't matter as much. Tomorrow, okay, we got some Canada and New Zealand news. And then the claimant account. So this is the unemployment claims for the British, okay? The British pound, where they are projected to have about a 5,000 count higher than the previous number. Okay, they're going from almost 18,000 to almost 23,000. Okay, that's the reading. So it'll be interesting to get that out. That's not really a good look, is it? When you got another, when you had 18,000 unemployment claims the previous period, and then you have another 5,000 on top of that for the very next reading. That's not a very good look. Okay, for the British pound, that could give the British pound some weakness. Now, it may very well just go back to normal. I don't know. Let's go look at the pound actually real quick. I want to go look at the heat map. British pound, where you at? There you are. They're straight up 50%. So they've exceeded expectations on 3 reports, and they've missed expectations on another 3 with 1 neutral. So they're sitting right at 50%. So yeah, that's pretty neutral as far as I'm concerned, as far as the currency goes. But for a day, that could definitely give the pound some spiky attitude for the day. Tomorrow, okay. But then Canada, we've got our the Canadian CPI coming out. Now it's not the year-over-year number. This is the month-over-month, as well as the median and the trim. So not the main one that comes out. I don't believe. Let me double check. Might have just said something that's not correct. Let's go over here real quick. CPI year-over-year. Yeah, that's the old one. 2.4. Yeah, that's what I thought. So yeah, not the regular one, but this is, kind of like a flash report, I guess you could call it that. Kind of a prelude to the main event, if that makes sense. So that'll be coming out during our stream tomorrow. See what their inflation numbers are looking like, and really this is the month over month. Now, I personally care more so about the year over year, but it's good to know for month to month as well. So that'll be a nice little check to see what their inflation's doing up there. I know it hasn't really been the greatest, to my recollection. Let's see. That's CPI. Oh, never mind. Never mind. I'm thinking of the unemployment numbers. Yeah, the unemployment rate up in Canada, that's the one that's not been the greatest. Now, they did have a nice little decline the previous time by 0.3%, but still, they're over 6.5% unemployment. Ugh, that's not good at all. And then New Zealand's rate statement, ladies and gents. So there's going to be some fireworks tomorrow night here in the States, okay? Because they are going to be releasing, and they do have their projections, their forecast set at 2.25%. Keep it the same, okay? Remain unchanged for the cash rate, their rate statement, their interest rates, followed by the lip flapping session thereafter. So I know I'll be paying attention to the Kiwi. Okay, that'll be 7 p.m. my time. I'll be chilling on my couch, probably relaxing, getting off the computer, but I will be hopping on at that time for sure. See what the Kiwi is going to be looking like. But that's tomorrow, and that's really when the fireworks start. So guys, on days like today, with no major events coming out, I like to look at the charts as more of a pure supply and demand day. We get distracted whenever these high impact events come out. But some days, I got to be honest, it's nice to not have to worry about that and just focus on pure technical supply and demand. Okay. Trend following, looking for those unfilled orders. And the cool thing is it really doesn't affect, by not having those high impact events, it makes your scalp trading a lot more manageable. Right? So we like volatility. Yes, we have to have volatility to make money. But sometimes it's just nice to take a break, flip down to a 15-minute chart, okay, and go to town and know that you're not going to have anything for the most part. Now, obviously, geopolitics is a different story, right? They could be dropping bombs in Iran or, cussing and discussing at each other elsewhere and to move stuff. But as far as just having a supply and demand only day, I love these days because now I can trade on a 15-minute chart, especially with some of the newer stuff I've kind of learned over the last week, and not just feel a little more comfortable about it. But anyway, just to finish up, that's tomorrow. Wednesday, employment numbers for the Aussie dollars coming out, CPI for the pound. Let's see here. Thursday, our normal weekly employment numbers over here for the claims, the unemployment claims. Looks like we're not really projected to increase by much, 2,000. So that's not a big deal. Looks like New Zealand's Reserve Bank Governor Bremen will be flapping his lips 5 p.m. Central Standard Time. That's on Thursday. And then rounding out Friday is PMI Day, ladies and gents. We got quite a bit of it for the Eurozone, the British pound, as well as here in the States. Now, these are flash numbers, guys. So keep in mind the flash numbers. Anytime you see a PMI and you see flash before it, okay, this is more of a preview to the main PMI report that comes out typically about a week later. Okay, so this is this Friday. The following Friday should be the regular PMI or thereabouts. Okay, maybe it's a Thursday, maybe it's a Monday. That's usually a Friday. But this is still a good, early indicator of the Purchasing Managers Index results, the numbers there. And that's for both sectors, manufacturing, services. So how much money is it costing them to run their business, basically? Now, the Eurozone, one item is in contractionary territory. That's the manufacturing sector. This is the Euro. And then the services is in expansionary because remember, 50 is the baseline. If it's under 50, it's contractionary. If it's over 50, it's expansionary. So always keep that in mind anytime you're looking at the both sectors of the PMI data. And that tells you a lot right there. I mean, British pound right below it. Okay, both of those numbers are pretty good. They're expansionary numbers because they're over 50. Go down to the dollar, same thing. The dollar here in the States, both numbers are expansionary pretty heavily because they're 52s. So that's pretty good. Okay. Good for the pound as well. So that's, that's a big day. That's going to be a big PMI day to see what it's costing these countries to do what they do best to make money, right? Creating goods and services. All right, let's take a look at pound CAD, since that it does appear right now to be our strongest item on the list. And again, it's a -7, so it's not like it's a -10 or a -12, but -7 is better than -5. It just makes me feel a little better. A pound CAD over here. And then, by the way, I've got a whole string of alerts over here that we can take a look at. Actually, I'll just stay here instead of the regular. And we'll see what's up. Now, some of these items are going to be, a -4 or a +4, +3, so neutral. But I still want to keep an eye on them from a technical aspect because, guys, if you know anything about the Edge Finder, it's a very dynamic list. Okay, the top setups, this is very dynamic. This thing is constantly changing as we have high impact, medium impact events coming out. Okay, it adjusts the numbers on here. Okay, the specs and the texts and all that. So I still want to be aware of all the alerts, even if they're neutral. All right, pound CAD daily chart we're looking at. Now, one thing with pound CAD, and I kind of went over this on my Sunday video yesterday evening, excuse me, is the fact that it's a very cluster, of price action. This thing is, ever since we bounced, if I go out to a monthly chart, ever since we bounced into this monthly supply, it's just been going sideways for months now. Ever since, what is that? March. Okay? So right before Liberation Day, right? It popped up in here and then it's just going sideways. These are monthly candles, guys. Monthly candles. Trying to get that reset. Right? Monthly candles. So almost a year of just sideways movement when we scroll all the way out. Remember, when in doubt, scroll out. When in doubt, zoom out. Go out and get a look at the 30,000-foot view of what you're looking at. The highest time frame that I've got or that I pay attention to is just going sideways. Right? It makes it easier. No matter what your trading strategy is, guys, no matter how you trade, out of the 1,001 ways there are to trade, it's always a good idea from time to time, at least once a week, but preferably as often as possible. It's always a good idea to scroll all the way out and look at what you're trying to trade from a 30,000 foot view, and then go into the 15,000 foot view, go into the 5,000 foot view before you pull out your microscope and start looking at your time frames. Okay. But yeah, going back to the daily, and again, it's just, it's just sideways. Now, obviously the current swing low, swing high is probably from up here to down here. So we appear to be low on the curve. Okay. Well, there's a couple of different curves you can look at here, but yeah, currently, if we look at this swing low and this swing high, then we're obviously diddling in the middle, are we not? See the red background? The red background? That means we're in the middle of this swing low to this swing high. The most recent swing low, the most recent swing high. So this is Chop City. It's kind of Chop City. And it's kind of turning, the question is it turning into, a former, if you kind of cross your eyes, then you got a little bit of resistance at one point going through here that's kind of turning into support. So if anything, I'd be wanting to, I don't know. Let's take a look at this. So that's daily down. Yeah, let's see. That's just hideous. That's just hideous. If I were to sell this, I don't think I'd want to do anything until we come up to at least up here, because there is a 4-hour supply up there. It's a ways away though. It's about 100 pips, and pound cat, I think, is one of those items that, yeah, this is one of those items that really doesn't move that fast, guys. This thing moves about 35, 40 pips a day, and that's it. It's just too damn slow for my taste. Pound cat moves like molasses. Oh, and by the way, if you guys ever want to know how fast your items move, if we go, let me see here. I have a website, and I know I moved it up here somewhere. Right here, average daily range for currency pairs. Check this out, guys. Right here, this will show us how many pips, what the average true range is, the average daily range. In other words, how many pips per day of a range. In other words, the high and the low, measuring from the high to the low of the day. Okay, do each of these items go? And you can see right here, it breaks it down by year. Now this is just, and then you can kind of sort this. Sort it from the low, meaning euro pound moves the slowest, 37 pips. This is, by the way, 2024. We'll have to scroll to the right to get to the last year. But the idea is you can click up here and sort by highest to lowest. So if you go the highest, then what's naturally at the top? Gold. Okay, gold. It's no surprise gold is the highest mover, the highest volatility in the assets that we look at. Talking about currencies, indices, and all that. It's number one. It's one of the most, obviously the most widely traded. Silver down here. Now that is, you have to go down here to actually scroll to the far right to get to 2025. We don't have 2026 because we're obviously in the current year. So this just kind of measures it out, and gives you the data for the previous year, if that makes sense. So they did just come out with 2025s. I hate the way they created this table because, as you can see, I had to scroll to the right to unlock 2025, but now it's kind of cuts off, the lettering from the asset. So it's kind of stupid the way they did this. I like the idea, but I hate their formatting. I don't know if I can even type it. No, I can't do that. Yeah, it's kind of a pain in the ass. I guess the easiest thing to do would honestly be if you got like Excel, just kind of copy everything and just put it in Excel. And then actually, you know what? That would make it a lot easier, wouldn't it? I'll have to do that off screen. I'll do this off screen and we'll play with it tomorrow. That way we can see what's good for 2025. Because again, when you scroll over to the right, it cuts off your crap. That's stupid. It's stupid how they did it that way, but I digress. But I like the idea of it. Okay. Just understanding how fast or slow your asset of choice moves on a daily basis in the currency world. So anyway, just finishing up pound CAD. Obviously, we have bounced into this 4-hour demand zone back here. We're getting a bounce up, but again, we are in the middle of the curve. Curve analysis is huge, guys. And as much technical analysis as I see all over YouTube, I don't think I see really not a single person talking about curve analysis. Whatever your execution time frame is, multiply it by 4 or whatever the case is to go to your higher time frame. And again, it's like a 30,000 foot view. Find out, hey, am I buying in a cheap area? Am I buying a discount? Am I buying in an area where we're at a high premium? Okay. Or am I diddling in the middle and getting chopped up with the regular retail traders, guys? Very good rule of thumb, no matter what your trading strategy is. This is probably the quote of the day, right? Or the lesson of the day right here is curve analysis, guys. Super important. So like me, I like to execute on a 4-hour chart, 1-hour chart. So for me, I go to my higher, and that's my execution. So I have to go to the higher time frame, in this case, daily, to see where price is in relation to the curve analysis. Eric, what's up? I have to ask you, do you think a crash will happen? I'm on the fence, but tend to lean on the side that I think the markets will have to reset. Do I think a crash will happen? My answer to that is I have no idea, Eric. No idea. I don't try to play Nostradamus, and I think you'll find any good, any coach, any instructor in trading worth their weight's going to tell you that. Anybody that says they think something's going to happen, they know something's going to happen, a lot of times have an agenda. But I'm humble enough to admit I have no idea. All I care about is just trading the price action. If we crash, great. I have a plan. My trading strategy obviously gives me very good opportunities to go short. And if something blows up in a good positive way, I got a strategy to go up, catch the long side to it. So I don't really know. I don't like to play those. I don't like projecting or guessing or, especially saying with any certainty that this is going to happen or that's going to happen. Anybody I've ever followed, any mentors of mine, any trading gurus that that have taught me, they've all said the same thing. I have no idea where price is going to go because we don't. Again, anytime you hear somebody that says, I know this is going to happen, I know that's going to happen, it's in general, it's a good idea just to, go look at a different YouTube page or something, because oftentimes they're trying to sell something or pretend like they know what they're doing. Or a lot of them that, come up with fake profits in order to show, hey, they know what the hell they're doing. So I'll caution anybody asking. I mean, it's a good question to ask, because if you ask somebody a question and they tell you with 100% certainty this is going to happen, great. They've told you all that you need to know about whether or not you should be paying attention to them or not. Okay? And my answer is just like any good mentor is, I have no idea. Right? I hope that helps, Eric. I hope that makes sense. That's transparency for you. Okay. And that's another thing. If somebody's not transparent, they will tell you, oh yeah, we're going to crash. Oh yeah, we're definitely going up. Right. They usually have an agenda and they usually have something to sell for you. I don't have anything to sell you. I just like to share what I've done over my 12 years of study, and prevent somebody from doing something stupid that I've done. Okay. I've blown accounts. And that's another thing. You have to talk to gurus that have blown accounts, because that's the only way you truly learn a lesson is blowing an account. Okay. I'm happy to say I've blown an account. And all the coaches I've worked with have blown accounts. So it's a rite of passage, but it really enforces and reinforces your risk management rules. It's a good thing. It's a good thing, guys. Don't look at that as a bad thing. Oh, they blew an account. They must not know what the hell they're talking about. No, that's the learned lesson right there. Been a long time, but yeah. And it was just a small account. It was a $2,000 account. Okay. I think I actually still have $70 left in that very first account I ever traded. I just haven't messed with it in a while. I ought to just put a whole, I ought to just leverage it all the way just for the hell of it on the next trade, see what happens. I don't care because it's, it's like I said, $70. Eric says, yeah, I get too greedy and overtrade. Yeah, you know what? We hear a lot about people saying, if you lose twice in a row, let's just say you're a longer term trader. Maybe you trade like me, 1 to 4 days. Oh, I lost 2 trades today. It's a good idea. And a lot of people will tell you this, and I agree that it's a good idea. Just step away from the charts for the day and not trade a third one. Don't open yourself up to a third loss. Okay. But far too few people talk about the exact inverse of that, which is what happens if I win 2 or 3 in a row today. Okay. I win. Oh, I've won 2 or 3 in a row. I got to keep going. I've got a hot streak. Right. Now you've got strong opinions on this either way. Some people will say, you've won 2 in a row, you've won 3 in a row. Great. Stop. Get off the charts because the average is average. Okay, this is the most annoying stat you'll ever learn in your entire life when it comes to money, numbers, sports where the score is kept. Okay? It's 3 words. Average is average. That is the most annoying stat. Guys, I'm a big bowler. I used to do a lot of tournaments and leagues, and that hit me hard because I might, in a 3-game bowling series, I might have 2 games at a 200 where I score 250. 250, 260, 240, something like that. Inevitably, that third game is going to be down in the 180s, 190s, 160s. Okay, because I used to be about a 215 average bowler. I need to get back into it. I miss it so much. But 215 average, that's basically where I left off. But the biggest chunk of my games for many of those years were, I was averaging 230s, 220s. But because I have one bad game to bring my average down, okay, it kept it at about 215. I always had a couple 230s and then a 180, 190. Fall below 200, right? Average is average. So anyway, I forgot where I was going with that. But anyway, yeah, that's right. I was talking about the trades. So yeah, when you lose 2 in a row, 3 in a row. I mean, you guys pick your own number. I recommend 2. You just get the hell off the charts, reset, because clearly you don't have your finger on the pulse of the market. That's the thing. When you have your finger on the pulse of the market, guys, it's like the best thing ever. It's like the NBA. They just had their 3-point shooting contest the other night. They're getting paid millions of dollars to be shooting the hoops, right? Shooting these 3-pointers. And still you see it's very difficult for them because all eyes are on them. Then they shoot and they brick like 2 or 3. But then whenever they sink 1 or 2, then they fall into that rhythm and then they shoot like 8 or 9 or 10 in a row. Can't miss, right? So that's trading. When you've got your finger on the pulse of the market, guys, you'll feel invincible. So I kind of weave this story back around to where I started, which is, yes, step away when you've had 2 or 3 losses in a row, but equally the same thing when you have 2 or 3 or 4 wins in a row. You got to step back and be like, okay, am I about to get greedy? Am I still following my rules? I'm a perfect example of this. I'll have a good trading week, and then I'll come in the next week and I'll ignore the fact of, hey, my RSI is not giving me a divergent signal, or hey, my volume spread analysis candles aren't that big in this demand zone I want to buy, but I'm going to buy it anyway. Or hey, the demand zone didn't break a structure. That's fine. It'll work. It'll work. So in other words, I get laxed. That's something that I fight even to this day. I'll have a great week and then I'll come in the next week and sometimes I'll just say to hell with this or that rule. And then I wonder why I had a bad week at the end of that week, right? So average is average. Be careful when you've had a streak of wins and losses on both sides. It works both ways. But anyway, getting back into this. Smacked some huge wins because it stopped, took a break, came on in today. Yep, that's it, man. That's it. That's it. There's a pulse to these. There's a pulse to find in the markets. And when you find that pulse, it's important to look at it from both sides. The consecutive losses and the consecutive wins so that our heads don't inflate. Because our heads will inflate when we have 2, 3, 4 wins in a row. We have to control that. Especially us guys, Eric, right? We're the macho side of humanity, and we think we can do it all, right? So we got to take a step back and protect ourselves from ourselves at times. All right, let's take a look at some of these other assets over here. Yeah, so remember, so pound CAD, just to finish up, we're in the lower end of the curve, guys. I don't want to be selling down here just because the edge finder has given me a sell signal. I can't sell anything until we do one of two things, okay? Unless I get a pullback to the premium zone, which again is the top third of the curve analysis, right? Hey, there's your, and I got a lot of lines here. Sorry, guys. Let me get rid of this line. Get rid of that line as well. Okay. So top, bottom, and then this represents the bottom third. And then this line represents the top third. And then obviously the red is the middle. So remember, diddle in the middle, you're going to get chopped to pieces. So if I'm going to trade this, I need to get a pullback up here. Maybe even the top of here, or what I'd like to see is honestly a breakdown to the bottom side of all this crap. Right? And I kind of drew it up right here. But break down through all this and then find a new push to the bottom side, right? So that would be the second choice. My first choice is, hey, let's get a pullback up here. So we're too far away, guys. Remember, pound CAD, it's a slow kind of mover. Okay, it moves. Oh, wait a minute. I'm sorry. It moves about 95 pips. Okay, so ATR, average true range. But it's my least favorite signal, even though it's my strongest signal as we speak. Euro Aussie, pound Aussie. Okay, let's take a look at a couple of these. Euro and pound Aussie. So here's pound Aussie here. Now, this is a better looking signal, a better looking trend. Oh, I don't want that. I'm moving averages. Okay, daily down. I don't really have a great 4-hour signal here. Yeah. So I'll have to go down to a smaller time frame on this. Okay, here we go, guys. 1 hour. What's up, Christian? How you doing, boss? Yeah, let me know, guys, if you have anything you're looking at, any trades you're in, anything that you're thinking about getting in. This is basically my first bit of time looking at charts. I looked at it a little bit last night. I obviously went through and cleaned up all my alerts, but I didn't really dig too deep into anything. I figured I'd wait for the day. Get that coffee. One thing I really picked up from the trading class, guys, is the use, a more structured way of using overbought and oversold signals on RSI, as well as a couple moving averages. Okay. It's called, it just basically helps to filter out some of these zones I'm picking up. So now what I've really added to my repertoire, and I've already kind of back tested this over the weekend. I feel like it works pretty damn well. I got to admit, it's kept me out of some trades that I ordinarily would have just gotten into. And it's really comes down to following a couple things. Number one, if price goes into an overhead supply zone that I'm thinking about selling, like right up here, then I'll be looking for RSI to go over 80. Okay, that's the red line up here. I got an 80 line, and I got a 20 line. So I'm not on the standard 70-30 like RSI typically has, the default settings. It's going to more extreme levels. Okay, just catching the extreme pushes beyond the overbought and oversold levels. So yeah, I'd like to see RSI go over 80. That's going to be this yellow line here, obviously. If I start getting into supply zones, or under 20 if I'm buying in demand. So that's really one of the main things. But then secondarily going down to moving averages and just verifying, hey, on a daily chart, okay, is my 8 EMA below my 21 EMA? That's exponential moving average. So we're not talking about the simplified moving averages. We're talking about the exponential moving averages where they're more heavily weighted closer to the recent pricing. Because all we care about is the recent movements. Hey, have we recently spiked down? Have we recently spiked up? So this is really, well, I would say this is probably step one. RSI really comes at the end, but that's my daily. So now from my daily, when I know through moving averages, as well as lower lows and lower highs, which at the end is still the most important thing. But once I know I'm in that downtrend, then I can go down to a 1 hour. And now I could pay attention to my 50 and 200 exponential moving average, which for me is the 50 is the blue, the light blue line. And then the dark blue is the 200. Okay. So if I'm in a downtrend, is my 50 under my 200? Okay. Then if so, everything's looking good and I just need a retracement back to the moving average, the 200 moving average for a possible buy or sell. But where I have taken it a step further is making sure that, hey, when we pull back to a 200, or have we pulled back to a supply or a demand zone? So I'm not going to take a trade just because it bounces off of a 200. I don't believe that that is a reason to take a trade on any strategy just because it hits a moving average, guys. Remember, price has, at the end of the day, prices have magnets, price points, supply and demand zones on higher time frames. So price acts, those zones act as magnets, but they also act as a paddle board if you're playing ping pong. Price ping pongs back and forth between higher levels of supply and demand. The unfilled orders, the consolidations, the accumulation and distributions of price, right? Followed by, and especially when they have those strong moves away from consolidation, which is a gap, fair value gap, right? We got to see that gap. But it's the unfilled orders. It's the push away points showing where supply heavily exceeded demand or demand heavily exceeded supply. Those are the points that we want to look for. So I'm not just going to take a trade just because it hits the 200. I still have to find my zone right there at it or just beyond it. So in this case, I'd be waiting, not shorting just because we hit the moving average. I'm going to wait and go beyond it, get up here. Now, once we've gotten up to here, once we've bounced into my supply zone, this is what I've added, guys. What I've added from here is, okay, we've hit my zone. We've hit my zone. Now, is RSI, has it hit the 80 level, the red line at the top? It has? Great. Do I short yet? No. The other step is look for that 1 hour close to the downside. When you get that 1 hour close, this is now showing that, hey, this more recent price action where we've trended up on a smaller time frame. In other words, the momentum has shifted. It's basically the retracement, right? Has that retracement movement at least started to show it's shifting? What does that sound like? What does that sound like, guys? Looking for a 1 hour close. Sounds to me an awful lot like break a structure, retracement back to a newly created demand zone in this brand new impulse leg. A confirmation entry, right? It's really the same thing. And then obviously, look for the, oops, I do that in the wrong spot. Break a structure right here. And then the impulse leg creates us a new supply zone. Okay, that's the example here. And then obviously from there, okay, that's really a very similar thing to the 1 hour candle close that I learned. So I don't know. I'm probably going to be using I'm still playing around with that part of it, guys, because I still personally obey the confirmation rules, break a structure, return to new supply zone, demand zone, or 61.8 of a fib retracement if you were to do something like this, right? Right. Get your fib retracement to 61.8. Look at that. I nailed that. Look at that. I hit 61.8 perfect without even thinking, guys. Look at that. Look at that golden line right there. How about that? That's pretty damn accurate if you ask me. But anyway, yeah, that's basically what I added. Okay. 8 and 21 EMA to verify trend, and then 50 and 200 EMA for the trend on the 1 hour. And then it can even be brought down further into the 15 or the 5, okay, for a scalp entry, which is another thing I'm playing around with. Okay, you guys know me as a daily 4-hour trader, right? Daily 4-hour supply and demand zone. I've been looking for something, though, like this for a while, something I can actually look for that daily income with. Because if you think about it, the swing trading like I do, I'm in a trade 1 to 4 days. So that's weekly income. But I was looking for daily. Now, obviously, supply and demand zones by themselves, they work on all the time frames. But what I like the most about this is it's helping to act as a filter. That's all it is. That's really all it's doing, guys. If I'm waiting for RSI to hit a 80 or a 20 level, if I'm waiting for my 50 to cross my 200 to verify trend is going in that direction, if I'm waiting to verify prices come back to touch the 200 moving average, but then I throw my filter on top of it saying, hey, just when we come back to that 200, have we hit a supply or demand zone, which is the most important part of it. So it's a filter, and it's just freaking awesome. And I did a look back at some of my trades last week, and at least 3 of my trades, guys, that were losses only because I choked the hell out of the stop loss. So remember, and this is something else I got to remind myself of, is quit trying to pick exact spots. Okay, you got to give it a little more breathing room. Hey, Euro New Zealand is, I think, a perfect example of it. Was it Euro New Zealand? Let me go double check over here real quick. Euro New Zealand. Nope, that was the winner. Yeah, Euro New Zealand. This was from the 11th. So let's go look at Euro New Zealand. I was so annoyed by this. If I go down to my 15-minute. Oh, wait, I'm over here, I believe. Over here. 15-minute. 12. Yeah, I got into this trade right here, I believe it was. Yeah, this is it. So I got into this short with the anticipation of buying to cover back down here, right? So I had a take profit down here. I had a stop loss right about here. And what happened? Right in this area when the intraday session switched over to the next day, I got bit by, what do you think I got bit by? I got bit by the changeover spread. Okay. You guys know how spreads widen when the markets change from today to tomorrow, right? I got bit by that because the spread basically latched on over, it looks like about 17 pips. A stupid wide range. And that's with Match Trader, guys. This is my new account I've got. Well, I'm starting to figure out really quickly that Match Trader has got some ridiculous costs because I got bit on 2 trades like this. Whereas if you see, okay, I got into the trade up here, but it would have paid me had I had a wider stop loss. But that intraday changeover got me when the spreads widen. during the market, changeover. So annoyed. I'm annoyed because my other accounts, I don't have that problem. I've got pretty tight spreads even during crossover periods. But this is the first time I stayed in on my new match trader account. And that damn thing widened about at least 17 pips because I already measured from here to here. Okay. I had my alert. I had my stop loss in here, right just over the 50 point, the 50 psychological number. The spread widened, about 17 pips at least. Ridiculous. So anytime you guys are looking at brokers, make sure that you're not getting into something that's got ridiculous spreads. Oh, okay, Eric. Yeah, get you some grub. I'll be on for probably another, at the top of this next hour, so 29 more minutes. So let me know. Let's see, Christian, if you're on, let me know what you're looking at. Be interested to see. Oh yeah, Eric, RSI, Bollinger, MACD with VWAP. Yeah, VWAP. I love VWAP, man. I used VWAP in penny stock world back in the day, and that was a very, very important one. And it works pretty well in currencies too, I got to admit. No sure thing. Yeah, there you go. All right, what else we got? Oh yeah, so we're looking at Euro Aussie and Pound Aussie. Euro Aussie right here. So daily chart. Okay. 8 is under the 21. I only have permission to short. Now on a 4-hour chart, I do have a daily 4-hour supply zone confluence up here. But right here, I'm actually keeping my eye. I've got another one here, but it's not something that I like. I'm probably going to ignore this supply zone. And that's why I colored it light red instead of regular red. Because look at it. When price did drop, we didn't even break any structures. So yeah, there's really, I don't think, because if I go down to a 1 hour, yeah, there's no point in me even paying attention to it. Zero. Yeah, I'm actually going to delete this. Yeah, so the candle itself is nice. Is that not a strong looking rejection candle? Okay, we had this big wick above it. So the buyers pushed price up like they had done. And then the sellers all of a sudden just said, nah. Or there was just a lack of buyers at this point, right? But then when we reversed the other way, we didn't even go that far. In fact, there's a demand zone right here that caught a bid and pushed it back up. So I had drawn that up for some reason, but the moving averages have now aged out. So I'm actually going to take this alert and move it up here. I want to stay at the daily supply zone because I got a 4-hour inside. Remember, there's my confluence. So that's what I want to see. And with price returning to that zone, remember, and the same, it rings true on a 4-hour time frame. Okay? I want to see RSI get up to the 80 level or the 80 level. To get severely overbought, right? Overbought. Now, overbought and oversold, just because it says that on the indicator does not mean it's truly overbought or oversold. Because when prices go into overbought, oversold territory, they can remain there for a long time. Look at gold, right? Just because gold got to overbought over the last 18 months, 24 months with this gigantic uptrend, didn't mean a damn thing. Because you see there's a graveyard full of short sellers in that chart. So yeah, I'm done with this one. Let's see. Let's go look at gold, by the way, guys. Now, gold is given, I do believe, still a bullish signal. Yeah. So gold is giving us a +6. I think it is one of the popular items to look at the moment. But let's take a look at gold. Let's take a little bit deeper of a look into the sentiment analysis side of it. So we have kind of created a new set of higher highs and lows. I mean, obviously this low is higher than this low. Obviously this low is higher than this low. Okay, we have a high here. And we technically have a higher high here. I mean, we got a wick. Okay, but that was not convincing at all. That was not convincing at all. I don't like that one bit. The only way I'll like this one bit is if we get a break above. Okay. get a break above here. Then the sellers catch on again because they're like, wait, hold on a damn minute now. We just had a double top. So they're going to push price back down. And I think the buyers will probably, okay, my guess is, or if I had to put money on it, I would say that the buyers will probably step in off of this double top, this former resistance, and become support to the upside. Now, when if we do all that, we got to now then pay attention to this supply zone right here. See that indecision candle on a 4-hour chart? That 4-hour, that red indecision candle, that right there could be a pretty decent profit target if you're buying a break and retest of this area. Okay. So I would basically, well, I better draw it up, in fact. So here's actually, before I draw up that 4-hour, yeah, daily, I don't really have much. So I'll definitely draw it from a 4-hour time frame. I mean, that's about as indecision as it gets right there, ladies and gents. So there's your overhead supply zone that you'd want to be aware of. Oh, by the way, the volume picks up pretty nicely. Look at the volume and the volume spread candles all the way at the bottom of that leg out candle. See that leg out candle, that big red candle that goes all the way down here at one point. So it goes all the way down, but then again, look at you got a yellow VSA candle. Okay, that's more than double the size of the previous candles, the relative candles. So that is what you call a strong drop. So if we had a very strong drop like that, then if and when price returns, which we know it will, so there's no if, hey, we got to be careful of that. If you're buying down here in this area, or really anywhere, you've got to be aware that if you're holding on to a nice unrealized profit, you'd best start thinking about getting the hell out of that trade by there, or at least choke the hell out of your stop loss somewhere up in this area, right? Because what's going to happen is you're going to bounce into there. And remember, price likes to bounce from higher time frame zones, supply to demand, demand to supply. So if you zoom out, that's an all-time high, right? Well, remember, we could be bouncing into that and then completely reversing everything. We don't know. Right? We don't know. We could get something like this. Or you could get something like this. I mean, guys, we don't know. You get something like this, and then we just break through all-time highs again. Right? We don't know. We don't know, but you gotta be prepared. You gotta be prepared. But yeah, that's really the play for me for gold. Because again, we're technically in the upper part of what? That's not it. We're technically in the upper part of the curve analysis. The curve, okay? Curve analysis, remember? Swing low, swing high. We're in the premium zone. So do you really want to buy something that's in a premium zone? I don't. I want to wait and buy stuff when it goes on discount. But if you break this double top and you get a new bounce, this is a whole new demand, a whole new discount potential because it's broken structure. It's reset itself. It's moved up. But alternatively, if we get a drop from where we're currently at, well, I got a demand zone down here, right? So that right there could be a possible buy. Remember, I'm not Nostradamus, and any good mentor that worth their weight in gold will tell you this. Ironic, I say that as we're looking at gold, right? As we don't know, we have no freaking idea, right? But if price gives me a discount, I've got a discount zone. But if price breaks out and resets everything, then I've got a new form of resistance to become possible support. And then I would hope that we would probably find a demand zone somewhere in that area, a newly created demand zone from this new impulse leg that breaks through, breaks structures, and resets itself. So that would be my plan of attack on gold. It's a no-go right here. No-go. Top third, it's a no-go. And the middle too. The diddle in the middle zone is a no-go. Either give me a discount, this bottom green projection tool line, or give me a breakout retest. Those are my only two interests right now on XAU USD gold, ladies and gents. Now, silver is a complete opposite. Silver is giving us a neutral reading. And if we go, first of all, let's take a look at just the naked charts for a second. So on gold, guys, obviously we're up. We have this big sell-off, profit taking. And then we've started making a new series of up higher highs and higher lows. But if we go to silver, pay attention to this price action right here. Just this price action, but let's look at this same price action on silver. It's down, still down. So just keep in mind that gold and silver don't always go 100% in sync with each other. And this is a perfect case in point. Might be a little easier to see on a 4-hour. Okay. So obviously gold and silver both had this big sell-off back on a Thursday and a Friday at the very end of January, right? But where gold started going up from that point, silver has been going down because we still have lower lows and lower highs over here. Okay. So they're not in sync. If we look at our correlation coefficient tool, it's probably going to be looking, I might as well look at it. It's not going to be simpatico. Let's type in, XAU USD for gold, and we'll apply that to silver. Oh, let's wonder. I'm looking at a daily. Yeah, there we go. So basically, when this is at the top, over the zero line, which is kind of the baseline, when this line is at the top, this basically says, hey, these two assets, meaning I put gold in down here, gold and silver basically are 100% in sync with each other, or pretty close to it. But as you see right here, we got a big dip. Now that may not look like much, but that's a big dip down. That just means that they're breaking apart from each other. They're going against each other. Remember, one's going up, one's going down. So just if you guys ever want to know that, if you ever want to know if two items are synced, then you can just simply go onto a trading view and find it. You got correlation coefficient right here. Okay. And then again, once you're in that, you just type in whatever symbol. So this is really good to use for, the dollar, the Dixie, along with, certain pairs. Put the Dixie in there. Then we take a look at, click on the gold chart. It's just really cool to see if gold is in sync with the dollar or vice versa, right? It kind of goes through periods of it. So anyway, sorry to get off topic. I do that from time to time. We'll get rid of that. But yeah, gold, I already went through gold. Silver, I just don't have anything on silver. Gold has got to work. It's got to do some work for me. Okay, just turn my drawings back on. It's got some work it's got to do. So about all I can say about that. Bitcoin, it's still neutral as well. Back down to the 70,000. Now remember, higher time frame, we've bounced into some demand zones. Remember, if I go all the way to my monthly chart on Bitcoin, we're just in one big monthly demand. Okay. Big monthly demand. Going down to the weekly, we're in a weekly demand, which is inside. So I've got a confluence, guys. Remember, that's this line right here. That's this rectangle. I just moved it to the left to get it out of the way. And then finally we go to a daily and look what's inside the weekly that is inside of the monthly. See that confluence? You see that price has dropped into all three of these demand zones, the confluence of them. And then what happened? We got a strong rejection, strong bullish reaction. Now we've went sideways ever since, but it just goes to show you how important it is to scroll out and see if you're bouncing into higher time frames, supply and demand zones. That's the beauty of it. You can utilize this on any time frame Talking about supply and demand zones, right? But this is big picture thinking here on any asset. Okay. But anyway, yeah, Bitcoin's dropped. Now we've been in a downtrend, but something's got to win out. Either the fact that we've went from 125 or something thousand all the way down to 70,000, this gigantic drop, okay, the continued downtrend strength, is that going to prevail? Or is this higher time frame demand zone confluence going to prevail in collecting price and pushing it back to the upside? Okay, pushing it to new highs, or at least recent highs or all-time highs. Okay, we don't know that. So far, it's just kind of hit those demand zones and just kind of stuck. So I don't know. This is indecision. This is nothing but indecision. All this is all just indecision right here. Right? Sideways. So I have 0 plays on Bitcoin. I need it to start making some higher highs and higher lows on a 4-hour minimum, but preferably even a daily, guys. If I'm just looking at it from a technical aspect. So I don't like that rectangle. Let me get rid of it. So yeah, nothing on Bitcoin. Just absolutely nothing. Oil gave us a signal for a day or two, but I think it's back to neutral. We have kind of started chewing into this overhead supply over here. And once we hit this supply, we've just kind of stalled again, guys. So not really anything. I don't really have a play on it. Obviously, you want to keep pay attention to the military, the U.S. military, and see what they're about to do in Iran, or obviously Russia, Ukraine. There's obviously the Greenland idea. So oil is basically just paying attention to that and the inventories that we get every Wednesday. Okay. Where are you at? Crude inventories. I believe it's Wednesdays. Turn on my yellow folder. Crude inventories. Where are you at? You're on. There you go. Crude oil inventories. Yellow folder. And there was quite a stash that was released last week, guys. I think it was forecast in the negatives last week, but we actually had an actual come out of 8.5 million to the positive side in the stock. So that's obviously a bearish number. That's a hell of a lot more supply that they expected. So when you have high supply, what happens to the prices? They drop. They typically drop. Okay. There's your candle right there. See that big red candle? That was your drop. Aided by the fact that by the way, we were bouncing in a supply zone. So we bounce into a supply zone. It comes out, they've got a huge stock of oil that they wasn't planning for. Prices drop. Right? So that's where you're at. Now it's dropped in the context of an uptrend. So it's just, in other words, there's not really a trade that I'm excited about in gold right now. Let's break this structure to the upside. Let's break this supply zone, and then look to catch on to the upside at that point. Okay, we've got the basics of a uptrend going, but we've got the forces of supply against us, and the real supply in the market being much higher than expected, which brings prices down. So kind of like gold. If I'm interested in trading oil, it's not going to be until we break this structure. We break this structure and retest where possible. Buy in oil. Got an overhead supply up here to worry about as well. So your profit zone would basically be something like this, right? That's your profit range before you start bouncing into overhead supply zones, right? So that's oil for you. I know I don't get into oil a ton. It's because I really don't trade it a ton, because oil is a problem child. It's kind of a pain in the ass at times, but it's a lot more fundamentally driven than it is technical. And I haven't studied OPEC enough to really understand it. So at the end of the day, I want to be transparent. I don't want to sit up here and pretend I know what the hell I'm doing with something. I want to tell you guys, hey, I don't know. When it comes to oil, that's on my to-do list. As far as doing some more studies, some more in-depth study on it. just so I can comprehend and understand the economics behind it, much like bonds, treasury bonds, okay, treasury yields. That's something else that I've got on my list. I literally put it on my list last night, and I've been thinking about it a while, but I really want to start understanding that whole avenue a lot better, because with the way bonds and treasuries, with the way they move, guys, it has a huge bearing in the FX market, along with other assets. So I need to better understand that for you guys' benefit. Okay, if I'm going to be on this channel for a long time, which I plan to be, then I need to be on top of some other things. I need to be on top of oil and treasuries. Okay, so that's something I've got to study, and I love studying, guys. I don't know what it is. When I was in school, I did not like school at all. But after graduating and living life and having a few years, having work experiences, going through the military, getting into sales jobs, guys, where you have to better understand people, it's made me to really appreciate things when it comes to not only obviously the financial system and economics, but world history. Just understanding how world history works and how geopolitics works, guys. We get pissed all the time about different people in office, out of office, and all the countries. But it's just interesting to understand how the world works, how the financial system, the monetary system, the banking system, guys, the fractional reserve banking system. You guys want me to show you something? I know there's only a handful of you on. I'm going to, first of all, I'm going to yell at my system for not doing what I want it to do. I'm going to put a link in the chat for you guys. Let's see here. I don't know if I've shared this with you guys on here or not. I can't remember. But there is right here. I want you guys to watch this. This is your homework. Okay. This is your homework for the day. I'm going to paste this in the chat. No, that's not the way I want to do it. Hold on. You know how sometimes you copy something, right? Let's do this. I'm going to copy it from here. I want you guys to watch this. This is talking about the creation of money and the fractional reserve banking system. It comes from a movie called Zeitgeist Addendum, which I got to admit, a lot of it's kind of kind of crazy. What do you call it? Like a utopic type of thing. It's a big utopia world. It's a little out there if you ask me, but this is the part that's specifically in the 7-minute to 22-minute time of the movie. But it talks about the fractional reserve banking system. It's crazy. It'll both enlighten you, open your eyes, and probably piss you off all at the same time, if that makes sense. So go watch that. Come back tomorrow. Let me know what you think about that. But yeah, that's really how the monetary system really works. It's not, that's not anything that's fake or rumor or conspiracy. That is how the money system works. But anyway, yeah, I don't want to say anything to spoil it, but definitely go check it out. Let's go back to some of my alerts over here. I've only got about 5 minutes. Let's see here. Yeah, let's see. You're on New Zealand. Back over here. Yeah, that's right. I'm still keeping an eye up here. So still a ways away. Yeah, I'm going to be, when I hop off of here, I'm going to be doing a lot of 15-minute looks today, guys. Because remember, we don't have any high-impact news events today. We don't. We just have some yellow folder stuff, and it's overseas in Japan, New Zealand. Okay. Some very, very light impact stuff. Probably the biggest piece of noise out of all that is going to be President Christine Lagarde with her lip flapping session that's already happened. As always, guys, if you open up the folder of any of these speakers, then you can typically just go to that country's central bank website, find the latest release, and it'll give you word for word what they flap their lips about. Oftentimes, they just put some pretty good stories over here to the right as a snapshot. But you can take the full script of the full speech, plug it into Grok, like I mentioned at the outset of the show, plug it into DeepSeek, plug it into GPT, and tell it, hey, summarize this crap in a half-page summary. Is it bullish? Is it bearish for X market? Is it hawkish? Is it dovish? Okay. Talking about looking at interest rates of the underlying country. So it's a really cool way to avoid having to watch paint dry, watch grass grow, drool all over yourself watching an hour speech or however long the speech is. Gives you a snapshot in about 2 seconds to give you the top line concepts, the highlights, if you will. So it's really cool. But anyway, yeah, not a whole lot today, guys. Tomorrow is all about CPI for Canada, as well as the rate decision for the Kiwi. And again, today, because we don't have any high impact, pure supply and demand. And I'll be happy to trade on a 15-minute chart today, guys. I'll still look for the higher time frame stuff. But it's days like today with no high impact that I'd like to get down here and play around in the noise a little bit more because it's just a lot more predictable. Missing all my stuff. Okay, so Euro Aussie, let's see here. We have bounced into some supply zone confluence. So there's a 4-hour inside of a daily. You can see we wicked into the 4-hour 3 times on this 4-hour chart. And what are we doing? We're rolling over. Move over. Now, on this 1-hour chart, yeah, right there we hit that supply zone, which it just so happened we coincided with going over the 80 on the RSI, guys. By the way, this is an RSI 6. RSI 6. So if I go into my settings on my relative strength index, guys, this RSI length number right here, normally comes standard as a 14. Okay? And when it's 14, you see how it smooths it out a lot more? It takes it too far to where you don't get near as many signals, guys. So rather than using the 14 moving average, the 14 period, we drop that down to a 6 and look at it on more of a weekly basis. Okay. It's going to push price. It's going to push the number closer to the extremes. Okay. So that's RSI 6. But yeah, look right here. You can see we had a pretty damn good signal right here. Pretty close. Now, I personally would have waited for the, well, right here. Let's see here. Euro Aussie. Yeah, see, I was in Euro New Zealand. I was short Euro New Zealand on Friday, and that's why I didn't get into Euro Aussie, because I just don't personally like getting into the same currency and doubling up the risk on any one currency, guys. That's just, that's my risk tolerance. You may have a risk tolerance that's different. That's the beauty of trading. We all have our own risk tolerances or strategies or things that we like or dislike. But that kept me out. Now I made money on the Euro New Zealand short. So, it's not like I missed out on the euro. But yeah, you can see right there, guys, it was a pretty good signal. Over the 80, the 50 was below the 200 EMA. At the same time, we bounced into supply. So far, it's working out well. But anyway, guys, I just realized I'm up. It's 8 o'clock. I got to get up out of here. Tune into Trader Nick, guys. I don't know the schedule yet, but I should be on there at some point this week. A1trading.com. You can find Trader Nick right here at Trader Nick on YouTube. But as always, guys, do keep an eye on my – oh, yeah, and by the way, just before I get up out of here, I did release kind of a Sunday video from yesterday. So I'm trying to do more of these, guys. Let me know what you think, okay? It's really the one long-form video I do each week or every other week. Just depends on how busy I get all the week is. Let me know if you guys like these, if you dislike these. I just basically kind of preview and review the prior week and the week upcoming. So love to know your thoughts. I'll get some shorts videos created. I had a little fun yesterday with a Beetlejuice theme on my shorts video. So I thought that was pretty fun. But other than that, ladies and gents, I'll get the new link created for the live for tomorrow. You guys should see it up here fairly quickly. But I'm out of here. Peace, love, and chicken grease. Have a wonderful Monday. Stay safe, guys.